Silver is on the move. In early June, trading volumes for silver ETFs like the iShares Silver Trust surged over 57% above average. But what's really driving this investor frenzy? Inflation? Skyrocketing deficits? Or is there even a bigger storm brewing? With Israel threatening military action against Iran over nuclear tensions, investors are scrambling for safe havens, and silver is shining brightest. Do you own any silver right now? Please comment below to let us know. Let's start with price. Gold is currently trading under $3,500 an ounce. Silver, around $36. That means for the cost of one gold coin, you could still buy over 90 ounces of silver. That's why they call it the poor man's gold. It's an accessible way for everyday investors to hedge against inflation. Historically, this ratio averages around 50. Right now, it's still hovering above 90. That means silver remains undervalued and possibly overdue for a breakout. The world isn't just worried about inflation anymore. Geopolitical risk is back, and it's serious. Israel has openly warned it may strike Iran if nuclear talks collapse, sending shockwaves through oil markets and global security. On top of that, the U.S. deficit is ballooning from just under 100% of GDP in 2024 to a projected 122% by 2034. That's weakening confidence in the dollar and boosting interest in hard, scarce assets like silver. Most people think of silver as jewelry or coins, but it's actually the most conductive metal on Earth, electrically and thermally. Silver demand has hit a record high, up 4% in 2024 alone. And it's not just solar panels anymore. It's EVs, AI chips, 5G infrastructure, and the clean energy transition. This is industrial silver's breakout moment. Since 2019, silver has been in a structural supply deficit. Annual demand, about 1.15 billion ounces. Annual supply, just 1 billion. That's a shortfall of 150 million ounces. In 2025, that deficit is still expected to be over 100 million ounces. As stockpiles shrink, the price pressure builds, and when reserves tighten, markets tend to move fast. You might think, if silver prices spike, miners will just dig more. But that's not how silver works. Only 25% of silver comes from mines focused solely on silver. The rest is extracted during mining for zinc, copper, and gold. That means silver supply is price inelastic. Even a $100 price tag won't automatically boost production. The gold to silver ratio is more than just a number. Today, that ratio is above 75. Historically, that's been a bullish sign for silver. What will perform better over the next 12 months? Please comment below to let us know. In 2025, silver isn't just a shiny metal. It's a store of value, an industrial powerhouse, and a shield against uncertainty. It's where tech, politics, and economics collide. Liked what you saw? Hit that like button, subscribe the channel, and join the journey from loose change to big change.